the county commission is not allowed to advocate under state law. He can explain that more to you. And we have Jack Weir, who is the chairperson of the effort to, first of all, get it on the ballot, and then he is working with the group that supports it. He is allowed to advocate, and he is a developer of affordable housing in Palm Beach County and has a lot of expertise on this issue. So I'm going to give Mack a chance to introduce himself.
Well, thank you very much, Joe and Joel. This is the Mack and Jack shows.
I like it.
So it's a pleasure to be here, and it's great to be in Subculture Radio. But I'm Mack Bernard, County Commissioner that I represent District 7. And so just a little bit background on the housing bond. In 2019, I woke up one day and I was like, wow, we have a housing issue. And I proposed a $150 million bond back in 2019. And that was without any discussions with anybody. And I was like, we need to allocate $50 million for affordable, $50 million for workforce, and then $50 million for homeless housing. That was in 2019. Of course, we all know what happened in 2020. COVID hit, so we had to put the housing bond on the shelf. And so while we put the housing bond on the shelf, the Housing Leadership Council, which Jack will talk more about, they started working on creating a housing steering committee to create a plan for housing. And then that's how we kind of like merged the idea from the Housing Leadership Council and, of course, also with the Board of County Commissioners to put it on the ballot. So I'll let Jack introduce himself and then also talk about the Housing Leadership Council picking up the ball from 2020.
Thank you, Mack, and Joel and Joe. Great to be here. So a little bit of background on myself. Eastwind Development started in 2007. We work all over the state, although our headquarters are in Palm Beach County. And we do affordable, we have done workforce, and we've done market housing and developments that have some of each of those as well. In 2012, I became a member of the Housing Leadership Council, which is a spinoff from the Economic Council, a business group that was founded in 2006, and Suzanne Cabrera is the longtime executive director. One of the things that we would routinely do is we would meet with our state legislators and say, would you try and get the Sadowski State Housing Trust Fund fully funded so that Palm Beach County and other counties would receive what they need. And each year they would try, and each year they would come up short. The funds would be swept from the State Housing Trust Fund for others. So it became a priority of HLC to try and come up with some way to have a dedicated funding source at Palm Beach County that we could count on year after year. 2 years ago, I became chairman. Also, I became a member of the Economic Council 4 years ago. And as this housing crisis coming out of the pandemic really accelerated, we saw that there was that it was more than just a housing issue that affected the residents. It was also a business issue as well, because businesses couldn't find employees and that they could retain or attract because of the housing issues. So HLC did a housing needs assessment in 2021. The findings were pretty serious. We had a shortfall from 2010 to 2019 of 20,000 units relative to the need. And over 57% of the renters in the county were cost burdened, and over 30% of housing owners were cost burdened as well, meaning they were spending more than a third of their income on housing. So 30% of renters overall are extremely cost burdened, spending over 50%. So when we looked at the options, we thought a housing bond made the most sense, and coincidentally, Commissioner Bernard had launched his initiative, so it made sense to start talking and working together, and that's what we did. As the Commissioner indicated, we had this pause because of the pandemic, but things accelerated this year.
Just as a bit of background, Eastwind is, what is your specialty?
So multifamily rental housing. And so we are developers of multifamily rental housing.
Is it always affordable, or is it?
Now, some of it is market, much of it is market, but we also have workforce housing units in a number of our market developments. It's what we call mixed income housing. So you might have 80% market, 20% workforce. And then we've also have done affordable housing and own affordable housing. So for instance, in downtown West Palm Beach, we own Avernia Place, which is a senior affordable housing community financed through housing tax credits.
Okay.
Hey, and just for the benefit of our listeners, Joel and I understand what workforce housing is, but from both your perspective, what's a layman's definition of workforce housing?
So when in the industry we use the term affordable, we're talking about units that can be financed through housing tax credits. Those are generally units that are available to households earning 60% of the area median income or below. In Palm Beach County, where the median income is relatively high, $90,000, that means households earning around $50,000 a year or less. So they're working households, but what we would call moderate income. Anything above that, so that range from 50,000 really all the way up to 120,000, that's workforce housing. So it's sometimes referred to as the missing middle, but these are people who have acquired skills, had an education, have good jobs, steady employment, work hard, have saved money, and still can't buy a home and are even finding it a stretch to rent at a reasonable level. It's that serious an issue now. I mean, when you look across the country, the hot spots in terms of housing costs, Manhattan, San Francisco, Boston, South Florida, including Palm Beach County. These are the most expensive from a standpoint of housing costs relative to income.
So let me give you an example in regards to, you say workforce housing. Like I spoke to someone who works for Palm Trend last night, and he said that he's just married, and that even though he makes a little bit of money, it is not enough for him to afford to rent or to be able to buy a home in Palm Beach County. So him and his wife, they're actually going to be buying a home in Port St. Lucie, and they're going to be traveling to Palm Beach County. So a lot of residents are buying places in Martin County, St. Lucie County, or moving out of the state because they make enough money where it's not affordable, but it's workforce. So the $200 million bond is a combination of both workforce and affordable housing. And so we'll get a chance to talk about the difference between both workforce and affordable. So in that way, the listeners can understand, like, for instance, if you're financing an affordable housing development, typically, if you're going to, like, as Jack mentioned, he was the developer for Avernia Place, which is a senior, how many units is it?
85.
So 85 units. So typically you would go out and you would get tax credits to be able to do the deal. And most of the time, you're in Palm Beach County, you're awarded 9% tax credits per year. And so if you're awarded a 9% tax credit, that typically would be equity that could be used to finance the development. And so before the high cost of construction, increase in interest rates, and labor shortages, you can win a 9% tax credit and you can complete that development.
What does that mean, a 9% tax credit? What does that mean? It's credit toward your interest
It's
rates?
an equity, so I'll let Jack go in a little bit more detail into it.
So it's a federal program. This is one of the distinctions. For affordable, there's a federal program. It's vastly oversubscribed. The funding is not close to what you need to satisfy the demand, but there is a federal program. For workforce housing, when you get above that 60% point, there's no program. It's strictly left to the localities except whatever the state sends us. So the way the tax credit program works is the person who buys the tax credits receives a credit against their federal tax. It's basically a tax subsidy. So you can, when you receive tax credits, which are administered through the Treasury or by the Treasury through Florida Housing, you can then sell those to an investor. These investors are usually corporations, banks, or others that have federal tax liabilities, and they use these credits to offset the liability on a dollar for dollar basis. And because of the yield on that, the developer can also often sell the tax credits for 85, 90 cents or more on the dollar. So it's basically a way of putting equity in. And the good news is the equity is paid for through the federal tax subsidies. So the equity is relatively cheap money from a developer standpoint. That means the equity can be 50 or 60% of the project cost. That reduces the debt, which means the rents can be lower. And the rents by regulation have to be lower because of the program.
So this is immensely complicated.
It is.
And you're going to a voter who might go to the poll without any idea that this question is even going to be there. But the ones that are discussing it on social media are worried that the county's going to waste money, or the developers are going to get it's all going to benefit the developers. How do you explain it to your average voter?
Well, I can tell you, housing is really, really complicated. But in simple terms, our goals are to, there's a housing plan that was created by the Housing Leadership Council. And so the funding is just one mechanism. And so the housing bond is $200 million to build 20,000 workforce and or affordable units in Palm Beach County, and to be built over a 10-year period of time. That's really the simple, easiest way to explain it. And then the question is, how much is it going to cost me? And so that cost is if your property is assessed, and so the average assessed home in Palm Beach County is about $300,000. And it would cost that resident $14 per year. And so that would be what the cost would be on average, which is about $4.36 per every $100,000 worth of value that's assessed. Not fair market value, but assessed value.
So I own a home and I have a place to live and I'm happy. I've got a roof over my head. What is it? Why is it in my interest to approve this, to tax myself? It's not going to be a lot of money in the grand scheme of things over the year, but why should I pay this? How is this going to benefit me in the long run? And that's just a question I think a lot of taxpayers and voters will ask.
Well, first of all, we have our workers who live in Palm Beach County, your firefighters, your teachers, that right now, if you're just going to lose the working class in Palm Beach County, or your nurses, they're not going to be living in Palm Beach County. You've seen store closing that says we don't have the workers. So at the end of the day, we need workers to fuel Palm Beach County's economy. And so we're going to lose our teachers. Even businesses who wants to move to Palm Beach County, the first thing they look at is, what is the housing situation in the county? And businesses have turned down coming to Palm Beach County because we don't have the workforce and we don't have the places for them to live. So it is going to eventually impact you if we don't have the houses for our residents. Our bus drivers, where they're going to live, the bus drivers who are driving your kids to school, there's no place for them to live in Palm Beach County.
Yeah, the question you posed, Joe, is if you're secure in your own home, you've paid off your mortgage, aren't you somehow insulated from this? And the answer is it really affects your quality of life too, whether it's your favorite restaurant that has to shorten its hours, whether it's a shop you like to go to, whether it's how long you wait in the doctor's office. That 24-hour pharmacy can no longer open 24 hours because they don't have the help to do it, the staff to do it. And even in the worst case scenario, if we're short first responders and you have a medical emergency and that response time is longer because of short staffing, it's going to impact you as well.
So then the other side of that is the distrust of government. And you said 200 million, 20,000 units, 10 years, which works out to 10,000 a unit. And of course, everybody knows you can't build a house for $10,000 or a rental apartment. So you are supplementing an existing stream of funding that developers can already tap, like the tax credits that we discussed. But one of the criticisms we hear over and over again is that the county doesn't have a lot of rules on how this money will be spent. It hasn't spelled it out, and we don't know that it really will help build anything. And then we'll talk a little bit about past history too.
So the Housing Leadership Council, they've created a full housing plan that discuss exactly not just funding, but also rehabilitation and renovation of existing units in the county, governmental reforms. And so there are things that they created a housing plan that's a framework that the Board of County Commissioners will decide on in terms of the final touches, in terms of, the RFPs and all of that kind of stuff. But at the end of the day, we have to make sure that the county does exactly what they're supposed to do, and also the developers. So everybody's got to have skin in the game to get this thing done. Yeah.
Maybe you could also help explain it. If Eastwind wanted to get 10,000 a unit for a project, what would it have to do?
So it's unfortunately a little more involved than that. But in the housing plan, there's a detailed set of bond allocation criteria. So one of the things that it says is that 25% of the bond proceeds at a minimum of floor must be used for home ownership. Home ownership is harder because the costs are greater for a unit, but it's very important to use the plan to help boost home ownership, particularly in some of the neighborhoods that are going to be targeted as part of the plan. But the overall sense here would be, in this criteria, it's an overarching framework for the request for proposals that the county are going to submit. And so one of the criteria will be the lower the income targeting, the higher the loan amount will be for that unit. So that if you did a unit at 120% AMI, the loan might only be a certain amount. If it was deeper targeting, 80% of AMI, that loan amount would be higher. I want to be very clear that the bonds alone will not produce the 20,000 units that's our goal. You're not going to get there on $10,000, $10,000 per unit. The advantage of the bond program, though, is it's a loan, it can be recycled, and it's combined with private funds. So it's combined with private debt, it's combined with private equity, so you have this multiplier effect where you may have a project that produces workforce housing units, and the public portion of it is only 5 to 10% of the total funding for the project.
So if Eastwind wanted to do a project, they would have to have the land, they would
Right.
have to have the other financing, right? They'd have to come in with something to the county
Right.
and show them, right?
Right.
That we just need this last 10% to make our project whole.
To do the workforce housing units, it is distinct. The county's current program is a mandatory workforce housing program. It only applies in unincorporated Palm Beach County, although it can be satisfied in other parts of the county. But the problem with the county's current plan is it basically is a requirement for lower sales prices on a portion of the units or lower rents on a portion of the units. And what's happened is the compensating mechanism is supposed to be a density bonus. But for home builders who are building higher end homes, the density bonus doesn't really do them any good because it doesn't fit with their program.
A density bonus would be when you get more units.
You get more units for a given acre of land. So what they often do is they pay into the fund. It's called the Payment in Lieu Fund for the Workforce Housing Program. And from a rental standpoint, landowners become aware there's a density bonus, so they don't charge you on what the original density is. They charge you on what the higher density would be. So your land isn't really cheaper, which is the point of a density bonus. So as a result, particularly in an environment of rising land costs, rising construction costs, the program hasn't produced that many units. This is a different approach. This is an incentive program. It applies in municipalities and say, we've got these pressing need. You're going to be having county and municipal governments pushing you to do workforce housing. Here's a way you can satisfy that and also receive a financial incentive to do it. So we think it will be a much more effective
So
approach.
it could go in a market rate product.
Yeah, you could have a 200-unit development, and of those, 40 of the units could be workforce housing units, and they would get a loan, but the loan would be a subordinate loan, second mortgage behind their primary construction loan and their private equity.
And so the goal is we want to do mixed development, so we don't want it just to be just an affordable housing. So if it could be just a market rate with workforce housing units involved, or it could be a market rate with affordable, or it could be a mixture of all three. So what we're hoping is to get the units done. And then also what Jack mentioned is this is going to be a loan. So this is not a giveaway to developers. This is not a grant. So it will be subject to interest rates. And then so once the unit is sold, or if it's ownership, they may borrow the money before it's built. And then when they build a unit and it's sold to the end buyer, then that loan is paid back. And then we can use that money again to create more housing.
That's a great point. Has that been, in both of your views, has that been promoted as part of campaign materials?
Do voters know
would
that?
understand that?
Yeah.
I think, remember, housing, I said it's complicated, but it is one thing that is definitely, there's not one penny is to be spent as a grant. So it is all to be as a loan, so in that way we can reuse it. This is kind of like in Miami-Dade County, they have I guess it's a dock stamp, and that they use that, a surtax, they use that for affordable housing. So that's how they're able to build and to create affordable housing in Miami-Dade. So basically this is Palm Beach County creating its own dedicated funding source that could be used 10, 20, 30 years down the road. So that way we can address our own workforce and affordable housing, and the funds to be reused, repurposed, so in that way we can build more units.
That's an important point, because what it means is after the bonds are paid off in 20 years, these funds are still out there circulating. And we can't do what Miami-Dade did, because they got a special carve-out from the state legislature in which they can take a portion of dock stamps. That's the only county in all of Florida. If we asked the state legislature, can we do that in Palm Beach County, as Broward did a few years ago, the answer was a resounding no. So dock stamps were off the table. Linkage fees would take years to build up to the point where you could do it, and it only applies in the county. You don't want to do another affordable housing impact fee, because that's raising the cost of housing when you're trying to lower it. And in terms of the most immediate impact, it was bonds. The other thing I would say, in addition to what the commissioner said, there not being a grant, there's not going to be any subsidy for market units. So if I could paraphrase the Liberty Mutual commercial, you only pay for what you get in terms of discounted units.
And I just want to remind the the listeners, that
Readers and listeners.
the readers and listeners, that we are the reporters here with Mack and Jack and Joe and Joel. And one other thing we hear a lot is that once the developers built it and sold it, nobody's going to be policing it to make sure it remains affordable in a year or 2 or 5. How's it going to be? How are you going to do that?
So first of all, when you give out the loan, there's typically will be a deed restriction. So for the ownership of a property, like if it's ownership, right now the county's workforce requirements are 15 years. And then so the rental, I believe the discussion had been for it to be 30 years. And so that'll be a discussion between the Board of County Commissioners to finalize exactly. But at a minimum, it will be at a 30-year restriction. So it'll be recorded on there. So, and then also the county housing economic sustainability department, every year that development would have to certify that those units are being used for the workforce or the affordable housing. So there is a restriction, and it is recorded.
Was there any thought to making it more rental oriented, because that would be the quickest way to make housing available for the masses of the workers you're trying to reach, instead of 25% set aside for single family homes?
We had that discussion at the Housing Leadership Council and the Housing Steering Committee, and we thought it'd be very important to have a floor for home ownership. So you can get more rental units per dollar, and that's clearly part of what the program's goal is. But we think there also should be a home ownership component, and so that's how that determination and that recommendation was made.
And so we right now the current market indicates that it should be, you're probably going to build more rental units now, but 5 years or 10 years down the road, the market condition may change, so where you may do more ownership. So this is a dedicated funding source that will be a lasting fund. So we've left the opportunity for the market to kind of like dictate whether it's ownership or rental.
So there's 3 levels of protection. The first is the deed restriction. The second is annual compliance monitoring for rental projects. And the third is a notice of sale. So one of the features of the program is if an owner of a multi-family rental development sells the complex after 5 years, presumably because it's appreciated in value, that loan is repaid, but the deed restriction continues for the full 30 years. So the buyer assumes that, and they're on notice because of the deed restriction. A couple other features I would note is the Housing Leadership Council is going to be providing oversight and input on the program. The county administers the program. They're the ones issuing the bond. But we think it's pretty important that there be an outside entity that measures the progress of the program, meaning the bonds and the whole plan, against the goals, so we can see what's working, what's not working, and make adjustments, working in partnership with the county. So that's an important element as well.
When you say the Housing Leadership Council will provide oversight, what is that? Is that like 1 or 2 people, or is that?
Right, it's 1 or 2 people.
Okay.
It's a small staff. The goal is actually to hire another person in the coming year to assist with the oversight of this program and beef up the
So
capacity.
we're not talking
there.
about a committee or a panel.
No, the Housing Leadership Council, I mean, one of the things that you'll see is when you have things like the Sales Tax Infrastructure Committee, it's basically an advisory committee, a citizen, but they don't have any staff backup. Housing Leadership Council, it's a board of interested and veterans of the housing industry. By the way, very few are developers. I think there's only 3 developers on a 20-person board, and one of them is a nonprofit. So these are people who are housing, they're planners, they're attorneys, they're lenders, they're others. So cross-section of people are interested in housing. So they're providing the oversight, and then you would actually have staff doing the work and doing that.
I see.
So we think that's an interesting feature, and that would make a difference.
So, as you know, the Palm Beach Post ran a series of stories starting in late August, detailing how the county commission had weakened its own rules, going all the way back to 2005, to require new developments to put in affordable homes. Over the years, the percentage required dipped from, I think initially it was going to be 20%. It ended up at 2.5% of a developer's units would have to be affordable. And the program also let developers pay a fee to avoid building any affordable units. But the fees didn't go to build housing. The fees went toward down payment assistance for the new homes being offered in those lower price range. And I think, Mack, you were rather critical of the county's performance before this story came out. And go ahead.
Well, I took responsibility for even decisions that were made before I was on the board of county commissioners, because at the end of the day, our residents are facing a crisis, and someone's got to take responsibility for it. And so our goals are, since we do have a crisis, we've created a mechanism now in regards to how we want to move in the future. And so the board will eventually have discussions on how do they want to address housing in the future. So, because our residents are facing this crisis. And so, now there were a lot of those decisions were made when I wasn't on the board of county commissioners, but, housing's been important to me. And so I've always made sure that we're trying to make the right decision to move Palm Beach County forward.
And I remember 2005. The economy was booming. Housing was going crazy. The market prices were going nuts. Nobody could afford, workers could not afford a home. And the county said, we got to do something. And they finally came to this rather progressive approach. But then the boom ended, and the crash came, and developers started saying, we can't do this.
But we were facing a recession in 2000 at that time. So I'm sure the board had good intentions in terms of trying to address housing and addressing the economy at that time. And as you can see, sometimes you've got to look at everything holistically to see some of the decisions that were made didn't result in many of the units. But at the end of the day, what's really important is when housing, the issue in terms of housing is a community issue. So some people will say, well, it's the developer's fault, or, it's the county's fault. But you know what? This is our community. This is Palm Beach County. When our residents are facing a crisis, then we have to address it. And so that's the reason why we have it on the ballot for the voters to make that decision. Now, as you know that to do a GO bond, the Board of County Commissioners had to place it on the ballot. There was another option which could have been a revenue bond, and a revenue bond, the Board of County Commissioners could have voted and just automatically have that voted on, and then we could have started building the houses. But since this is our community, we're having discussions about housing, and I think it's healthy to have these discussions because housing is complicated, but our residents in Palm Beach County are facing a crisis. And, sometimes people are running for office and they say, hey, vote for me and I want to address this issue. Well, the Board of County Commissioners, they didn't just sit on their hands, and they were like, hey, this is a problem and this is a solution. Now, is it perfect? No, but it's moving us in the right direction.
Have either of you heard much in the way of opposition to this, other than what's been trickling into the
In today's newspaper.
I mean, up until this week, it looked like you guys had smooth sailing, and then all of a sudden,
I don't think
Fred Pinto, you are not going to see 20,000 units built over the years with this money by lending it to developers and hoping that they do the right thing. That's not going to happen. That's a fallen fantasy. And that's
The mayor of Royal Palm Beach.
That's the mayor of Royal Palm Beach's view, but
Well,
view.
what I can tell you, housing is it's complicated, and it stirs up a lot of emotions in regards to whether this is going to work or not. But what I can tell you, the residents that I'm speaking to who are facing a crisis where their rents increase by so much. I was at JFK 2 days ago and speaking to the nurses who were telling me that we cannot stay here because we cannot afford to even rent in Palm Beach County. So, a mayor may have a concern, but what is that mayor's plan? What did he propose? So we have something that the voters can decide, and you can have a lively debate, but at the end of the day, there is an option for the voters, so in that way we can address it. No legislation is ever perfect, so you can always try to make it better.
From the limited opposition that we've heard, we haven't really heard an alternative plan. So, I mean, is the idea that we just sit here and passively accept our fate? Year after year, we get shorted by the state and we don't respond? Or Palm Beach County has a population larger than 11 states and D.C. Do we take control of our destiny by setting up a pot of funds that we can control so that we know we can dedicate those funds to housing? One of the reasons why the programs haven't been more successful is no developer can organize a business plan around what the county might have. Is it $2 million in SHIP one year? Is it $5 million another year? Is it $4 million? You don't plan on that basis. So you plan for alternative means of development. I mean, there are plenty of developers who would be interested in providing this type of housing. The other thing I would note is there's a number of aspects of the plan that go beyond the financing. One of them is planning and regulatory reform. The thing that caught my eye is Royal Palm Beach is somewhat distinctive, and that's the only municipality in the county, as far as I know, that has a minimum unit size. The last time I had checked, it was 1,000 square feet plus per unit. So what that effectively does is limit the amount of one-bedrooms you can do in that municipality, which limits affordability.
So another thing that came out in today's paper is that the City of Palm Beach Gardens has written a white paper. I don't know where you were of that, but they're quite critical of several aspects of it. One being they fear that municipal residents who will be paying this bond issue tax in their county tax bill will also be asked to pay a tax, more money to their municipality, because that municipality may want to match or provide incentives to developers as well. So it'd be double taxation. How do you react to that?
There's a discussion that we had with the county. The county at one point wanted to require a local match, and they backed off that after our discussions. So as long as a municipality provides expedited permitting or some other indicia of support for the project that's located in their borders, then no additional dollars are required. So there is nothing in this financing program that mandates the approval process in a municipality. The approval process remains within the jurisdiction of the municipality. If the municipality chooses to match from whatever the source, then that's within their discretion. It's not strictly required by the program, so there's no double taxation that automatically flows from the bond program.
So they also put out there, and this was different because cities don't often, put things like this out there, the list of contributors to the PAC that has been raising money to send mailers out, a very professional approach that many people probably saw in their mailbox. And there is no opposition. There's no opposition PAC. There's nobody else raising money. But, you look at people who gave money in large sums. There's $50,000 from Florida Crystals. There's $50,000 from an entity that looks like it's related. $50,000 from Next Era Energy. They've raised $900,000. And one of the biggest things we see on social media is that this is just a gift to developers. So I think that's one of the most important things for you to try to answer.
Well, if you look at some of the people who've given money, FPNL is not a developer.
No.
So, so this is a community effort. We're facing a crisis in our community, and many of the businesses have been impacted by this housing crisis. If you look at the list, you'll see that we received, I believe, $25,000 from the Breakers. The Breakers, who are a hospitality organization in Palm Beach County, their workers cannot find places to live in Palm Beach County. So the Breakers are not developers. They care about our community. So a lot of the people who've given, this is a very diverse group of people. It's not like where 5 people came up with $900,000. This is close to 120 different entities, business people who said, hey, there's a problem in Palm Beach County, and we want to be part of the solution. So this is not a developer-driven fundraising effort. This is our community, and I take issues with people just saying that this is developers. This is our community. Our businesses are in Palm Beach County. They're in downtown West Palm Beach. They're all over Palm Beach County, and they said, hey, there's a problem. We need to be part of the solution.
One of the things I was hoping the papers would pick up on is that the county is restricted from advocating, as you referenced earlier in the program. And when you think on the face of it, it's a pretty absurd statute, but they're issuing the bonds, but they can't really advocate or educate on behalf of that. So that's why you've had to have this private fundraising effort. We have gotten $0 from the county in terms of doing this. So
So the business community came forward.
The business community came forward to fill that vacuum, and it goes back to what I said before. It's not just a housing problem, it's also a business problem for the community and for the county. So, we have a lengthy list of endorsements, the League of Women Voters, the United Way, the Realtors, the Chambers of Commerce that go from north through central, Chamber of the Palm Beaches, Boca Raton, Economic Council. So firefighters, SEIU, it's a broad coalition that's come together and says, this is an urgent community problem and we need to be proactive in addressing it.
So one of the more interesting contributors is a PAC by the name of The People versus the Powerful out of San Rafael, California. Do you know who that tracks back to? Airbnb. Now, why is Airbnb supporting a housing bond issue to build more affordable housing? Wouldn't that compete with their product?
Well, what I can tell you, like when we're in Palm Beach County, this is paradise. Palm Beach County is paradise. And if you have a crisis and you're asking people to contribute to be part of the solution, you know, everybody who's involved in the community have decided that, hey, we want to be part of the solution.
So they might win some goodwill by being part of the community.
Yeah, well, you're hoping that businesses there's a they have a corporate, but there's a goodwill that they want to establish in the community, and because this is their community also, the residents are impacted.
Okay, Jody, have some.
No, just the one thing that keeps coming back to me is that I don't know that a lot of people realize that this is a loan.
It is.
Yeah, so they call it, I think the Sun Sentinel or one of the papers called it a slush fund for developers. It's a little different if they have to pay it back.
It is. So we were very, very adamant about that being a loan, and because we didn't want any taxpayers' dollars to be given as a grant. So that's the reason why we have it set up as a loan. So in that way, it is repaid back, it is reused. So in that way, we're never coming back to the voters and say, hey, give us another bond fund. So in that way we can address housing.
One thing we've heard over and over again is, where is this going to get built? And the Palm Beach Gardens white paper points out that the county commission hasn't enacted the plan that the Housing Leadership Council came up with, coalition. But I'm sure you hear that a million times. And how do you explain that when there is no list of sites that are going to be built on?
Sure. So I would characterize it in several different components or segments. So one is major commercial corridors, and then related to that would be urban cores like West Palm and transit-oriented developments. So what you're seeing, and ironically, Palm Beach Gardens is a good example, the area around where the Tri-Rail station will be by PGA Station, they've approved a considerable amount of density for apartment complexes that radiate from that area, and more are planned both in Legacy Place as it redevelops and also downtown at the Gardens. But PGA Station, Lomans Plaza, those there, they've been approved for a significant number of units. So that's one area. Think of it urban core, transit-oriented developments, and then related to that, major commercial corridors. Another big element of this will be redevelopment of existing properties. So you've seen in some cases aging shopping centers that have been redeveloped into more mixed-use communities with a mix of residential, retail, entertainment, restaurant, recreation. The same thing can happen with offices when you drive along some of these commercial areas and see these office buildings that were built in the 60s with these large field parking lots. They can be redeveloped where you have a parking structure, you keep the existing office, and you can put multifamily there as well. Hotel sites and everything as diverse as churches, bowling alleys, and others. So think of it as a way to repurpose existing sites and make them more efficient from a residential standpoint.
But the county isn't going to say, build it here.
The county is not. This is going to be a private sector developer-driven process, meaning the developers will come in with the specific applications. This is how it works on the tax credit side with Florida Housing, where the developers line up the site, they submit applications, and they compete for awards. And I can tell you that in a place like Palm Beach County, there are 5 applications for every award that's given out. So it's, if you provide the incentive, and the incentive is sufficiently appealing, then the developers will come. The other area that I was going to talk about, and this is important, is neighborhood reinvestment, neighborhood revitalization. And that's going into neighborhoods that have historically been disinvested, and many are minority neighborhoods. We see this as a prime opportunity for infill and for also raising the home ownership rate. And we emphasize in the plan that it's very important that a neighborhood association be involved so that there is an overall plan for reinvesting in a particular neighborhood. And the reason for that is you don't want the reinvestment to become a trigger for displacement of large numbers of existing residents. This is the gentrification concern you hear about. You want to provide the housing, you want to improve the neighborhood, but you don't want to be changing the character where you're displacing large numbers of people who have been there for a long time.
I noticed that contributors to the fund were Minto and GL Homes, which are some of the biggest builders in our area. Do you think they'll be applying for these kinds of credits within their projects, or will they leave it to the specialty builders who are already doing those kinds of units?
I would say that they'll probably leave it more to the specialty builders. They historically have been the ones who've utilized more of the payment in lieu option. I think there'll probably be several different types of projects that will be financed. The one we already talked about, which is the mixed-use, larger market projects, those will primarily be done by for-profit developers. But there's another category that will be more nonprofit developers and smaller for-profits. And these will be small-scale rental, some home ownership, but a higher percentage of workforce housing units. There hasn't been a funding source to make those projects feasible until this point. This now makes them feasible. This enables them to happen. Another one is affordable deals, which the commissioner referenced before. Because of the sweeps from the Housing Trust Fund, there's a different type of housing tax credit that's done with tax-exempt bonds. The tax credits aren't as high, but the bonds provide a lower interest rate. They need gap financing, which they get from a program called SAIL. It's the Florida State Apartment Improvement Loan Program, Incentive Loan Program. And the SAIL program can only fund one project a year in Palm Beach County for the most part. This gap financing program could enable 2 more of those affordable deals using housing tax credits and tax-exempt bonds to be funded on an annual basis.
I don't want to take us too far off topic, but homelessness is still on a lot of folks' minds. This does nothing to solve that problem, and if that the answer is no, what more can the county do? I know you talked about the original plan for this had bond money set aside for homelessness.
Well, as part of the infrastructure sales tax that the residents voted for, I believe $25 million was allocated for homeless, where housing for where it'd be extremely low income. So what we're hoping, because of being able to have this dedicated funding source, that would be more for affordable and workforce housing, then other funds that we receive, the county can make decisions in regards to repurposing those funds. If it's for homelessness, then it could be done that way. So that's kind of like the approach that we're going to take.
Not every bucket of cash satisfies every need, but what the bond will do is make the overall pot for housing larger.
Right. Do you think there will be more coming down the pike that the county commission can do for the homeless issues?
Well, what we've done is during COVID, we have the Lewis Center, which is in West Palm Beach, and we have the HRC2 that is being built right now, and also we opened up HRC3 in the Glades. So in terms of homeless, like, we've been really working really hard to address this issue, but what's happening also, because of the fact that you have a lack of housing for both affordable and workforce, we're squeezing more people into the homeless category. So if we're able to create these new units, then you'll have less people being pushed down into the homeless category.
And Commissioner Bernard, at the beginning of the debates that led to the commission approving this voter referendum, the water bond was discussed too. Can you talk real briefly about what happened there and if that's going to have legs at some point in the future?
Well, that's Mayor Kerner had brought up the water bond when he became mayor, and also so there was a discussion in regards to the water bond, and I believe that we tabled the issue, so in that way it could be brought up in the future. So I believe that there are folks who are working on that issue right now, and at some point they will bring it up.
Was his original thought to put both of these issues on the same bond?
No, not on the same bond, but to put them on the same ballot. But I believe that the votes were not there at that time for it to pass.
Right.
And so the county commission voted against the environmental bond.
We didn't vote against it because it was just tabled.
It was, they
Postponed.
voted to table it,
Mhm.
which stopped it from being on this ballot. But you have another item on the ballot that causes people to pay more in taxes, and that is the school's 1 mil bond, the 1 mil tax. That is not a bond issue. That is not creating a pool of money. That is creating a steady flow of income to the school district. Have you found that voters are concerned and picking one or the other, or do you find that voters are ready to support both?
So I've had the chance to go around the whole county, and county question 1 is the housing, and county question 2 is the reauthorization of the millage for the school district. And most of the residents that I've had the chance to speak to are in support of both housing and also our schools. Because everybody's facing the housing crisis in Palm Beach County, and also in regards to the reauthorization, it's not a new tax, so residents are in support of that.
I was curious, who makes the decision on where on the ballot are these? Like the first, I did early voting the other day, and the first one was the governor's race. And then you went through, it seemed like pages.
It was not a
six
lot
or
of
seven-
pages. So.
6 or 7 about the judge retaining, and then you get to the housing and the
Right.
school.
People need to flip it over, or they won't even know.
We've seen
Like
we've seen longer ballots, and in Miami-Dade, it's like 6 pages long. So really, this ballot, I think it's a very simple ballot. You've got on the front page the folks who are running for office, and then in the back page you have the ballot initiatives. You have 3 ballot initiatives that were passed by the state, and then you have county question 1 and county question 2. So I think it's not as complicated as it normally would be.
I did want to get your advice on that one constitutional ballot change that calls for an exemption on property taxes for certain types of worker, paramedics, firefighters, police. I don't think you can advocate, but I'm just wondering, how should a casual voter respond to that? I mean, should there be job-related exemptions to property taxes?
Well, this is an initiative that was passed by the state, and so if you're talking to, from the property appraiser's perspective, if you're shifting that, if you're taking that tax away from someone else will be paying for it. So that's one way to look at it. But it also, our teachers and our firefighters, our police officers, they're also struggling to find places to live. So, so I just, it's a personal decision for the voters to make.
Hard to understand it, but the county will get less revenue from property taxes if this goes through, unless it raises its rate on everyone else.
Well, the county, these are homesteaded properties. So, like in terms of for non-homestead properties, there is a charge that could be charged for non-homestead properties. So, so someone else, if it's taken from one place, typically someone else will end up paying for it.
Do you have any thoughts on that?
Difficult to administer. What happens if somebody changes jobs in the middle of the year?
They've got to inform the property appraiser, and who's going to do that, right? They're going to keep taking that drop.
I should know this answer. So you're not on the ballot. Some of your colleagues on the commission are up for election.
I am not on the ballot. I have 2 years left, and I will be term limited.
And
So.
then what are we going to see of Mack Bernard in 2 years?
I'm gonna start the Mack and Jack show.
You could take the 5 o'clock spot on Subculture Radio.
Well, you have to come back and tell us how this bond is going if it passes. Do you want to say whether you think it's going to pass? Where does it stand 4 days before
Yeah, do you think, not that
election
you
day?
don't be biased, 'cause I know that you both want it to pass, but
Right.
realistically, how do you think it'll do?
I think it'll pass. I think when there's a crisis of this magnitude, I think it gives the community an occasion to pull together. And it's really in the best policy tradition. It's like, let's solve the problem. This is a concrete step to solve the problem and to make a meaningful impact in addressing such a widespread housing shortage. So I understand some of the concerns and the criticisms, but at the end of the day, I do think it'll pass.
For me, when I speak to residents throughout the whole county, I know that they're facing a housing crisis. And what's great about Palm Beach County is whenever that we're facing a crisis, the residents step up. Even though, they may own a home, they may not get a benefit, but if they're able to help another person to be able to have a home in Palm Beach County, to be able to work in Palm Beach County, the residents always step up. So I do believe that the residents will support the housing bond.
And it needs 50% plus one, right?
50% plus one. And Will is the plus one.
Do you want to do a sign and reintroduce ourselves?
Joe Capozzi here with Joel Engelhardt. We're the reporters, and I can't believe we had a productive hour talking about this important housing bond, which, I mean, you guys, seriously, you brought a lot of points out that my next door neighbor may not, I mean, people are under the impression it's a slush fund. They don't know that it gets paid back. And another thing I heard was, well, I'm fine. How does this benefit me? What's the danger to me if it doesn't pass? And you both did a great job explaining that. And hopefully the voters take all that into consideration when they go to the ballot on Tuesday.
And we want to thank you very much for being here. Jack Weir with Eastwind Development and the Housing Leadership Coalition.
Council.
Housing Leadership Council. And Mack Bernard, a Palm Beach County Commissioner for 6 years with 2 to go. And then what he does next, we don't know.
Thank you very much.
Thank you all.
Thank
Have
you,
a great
everybody.
weekend. And thanks to Will for guiding us through the technical hurdles once again.
That's right.
Have a great weekend. And if you're all on Clematis Street, grab a coffee at Subculture Coffee and go see XTC in the studio right next to us, an influential band from the 80s.
Tonight.
They take the stage at 8 o'clock, and it'll be well worth it. I'll be there. See you there.
All right.
Thank you, guys.
Are we off?
Hour went by quick.
Yep.
Yeah.
All right.
Last week.
Sorry it got so hot.
We had a former colleague
Yeah, it
on
gets hot in here
patio.
quick. We
just
gotta
to
figure
talk
out
about
something
newspaper
for,
industry
I'll
and
listen
why
to it
Joe
and see if the
I
fan
do
noise was detrimental.
We were like, 20 minutes went by and we were like done talking about it.